Morning, America. Good afternoon from Germany. And it's Wednesday, mid of the week. We have some news half an hour after the market is open, and we see, maybe a slight turnaround. Let's have a look at the chart and see if we finally manage to see some green again after 5 consecutive red days. Let's go to a day chart in Nasdaq futures here. And we see we had 5 consecutive red days. But yesterday, you see this is what we talked about yesterday. I wanted to see exactly a candle like this. This is called a doji. You see the wick on the downside, a smaller wick on the upside, and almost no body of the candle. And that's exactly what I wanted to see. Because here, you clearly see the indifference of buyers and sellers. So here the closing was where the opening was, and this is normally a candle we see at the bottom of a downtrend, and this could be just now the beginning of an uptrend. We see how far it will go, maybe back to 11,500 to the next Fibonacci level here, or maybe even higher. Let's see. But for now, it's looking a little bit more bullish than it was in the previous days. And we had some earnings yesterday from Nike, and I think it was FedEx, something like this. And these were pretty good earnings, so it's good, a good start for a day with nice after hour earnings, better than expected. And yeah, even with the bad news from Bank of Japan yesterday, we talked about this in the stream of yesterday. I will just bring up where's the currency chart here? Do I have it? I know I had it. Oh yeah, here it is. US dollar, Japanese yen. Let's see this on a day chart. In 3 minutes the market will be opened, and we will switch back to Nasdaq. But just let's talk some words about what was happening in the night of yesterday. The Bank of Japan was rising interest rates, or not rising, but they said they will accept a higher interest on 10-year bonds, government bonds. And yeah, this was a little bit of a shocking effect. You see the clear downtrend here in US dollar, Japanese yen already in the previous weeks, beginning in October 24th here. But yesterday was special because you see how far we dropped, more than 4% down. So the US dollar weakened, and Japanese yen got stronger. And this is a big movement for forex, for current currency. And this happened because of the possible higher interest rates in Japan. And yeah, it was a big surprise because almost no analyst expected this. And it happened in the middle of the night, or almost my night, because it was 4 a.m. my time, 10 p.m. Eastern time. And let's see how far we can pull back today. You see it's a little bit green. But it's still a downtrend. And this is a problem for all carry traders who pick on they do leverage trades with borrowed money from Japanese yen with a cheap interest rate, and then they carry the trade to the US and invest the US dollar. And the problem is when the US dollar weakens and the Japanese yen got stronger, then they have more debt in Japanese yen. And you clearly see this because in the past weeks or the past months already, the Japanese yen was getting stronger. But still we will go on a weekly chart and you will see it, because the Japanese yen is really, really weak. It's a multi-year low of Japanese yen, or high of US dollar, how you want to see it. And that's why this trade worked really, really well in the past month. But now it's turning, and this turning point is dangerous for the market, especially for all the leverage trades and the borrowed money, the cheap borrowed money in Japanese yen. And this can affect the market in the next weeks or months. So we have to have a look at the Japanese yen, and it is an important news what we had yesterday from the Bank of Japan, the central bank in Japan. Okay, the market is open. Let's move here now back to Nasdaq, and then we will move on with our other currencies and commodities. So we have in half an hour, we have some economic news. Let's just bring this news up here, a little bit smaller, though that we can still watch the chart. We have in half an hour CB consumer confidence. You see it's a 3-star event. Forecast is 101 point. And if it's lower than expected, this could be good for the market, because again, bad news are good news for the stock market, because it means lower than expected inflation risk and therefore lower than expected interest rate hikes. Also important will be existing home sales. 4.2 million is the forecast. You see it's lower than the previous months, and the market wants to see even lower numbers. Like yesterday, we had a small positive reaction on the news yesterday, but then again a sell-off. But yeah, we had the buybacks later in the day and closed almost at the opening price. Today I want to see a green day, so this would be nice to have a green day after a doji candle. And yeah, we still have to wait for market direction now. Half an hour until the news are out here. And also crude oil inventory is like every week. Nothing really special from this news. But we have more to come this week. Retest of 11,200. Let's just move back to Nasdaq to see the important levels here. I will go to a higher time frame, like 5 minutes, so that we have all the pre-market data. And here we clearly see the low points. It was here. Low point was at 11,186. And this was almost the closing of yesterday. You see the closing here was at 11,175. So a little bit lower. But yeah, this is the area where we had the closing and the pre-market lows. So we should find a support at this area and then maybe turn to the upside. You see that the high point was the Fibonacci level. You see the 61.8% level at 11,253. Yeah, the high point from this night during Japanese session was 11,263.25. So just 10 points above the Fibonacci level here. I will go back to a day chart and you see the Fibonacci levels again. This is the high point and the low point here from October. These are my current Fibonacci levels. And we are about to test these Fibonacci level. We normally need 2 attempts to go above this level, and then we will probably see the breakthrough. So we had 1-2 attempts, and then probably in the 3rd attempt, when the market is open, we will have enough power to go through. And here is the rejection from the lows here, from pre-market lows. Nice point to buy in. And it's going fast now. Let's see if we can go in the first minutes to the upside. And after the Fibonacci level here on the upper side, what else do we have? Let's move to a 15-minute chart. You see it was also almost the high point of yesterday here, 11,247. So it's an important level here. And then there will be here the high point of Monday and the next Fibonacci level at the 50% level. So we see here this should be a resistance area. But yeah, therefore we have to go higher for about 2.3%. Don't know if we can reach these levels today. But at first I want to see a break of the Fibonacci level here at 11,250. And then we can move higher. But we will probably need to have the news coming out and then see which direction we will go further on. Okay. Expected move till the end of the year is only 90 points, is saying Liam, don't know how to pronounce it. Yeah, we can have a look at the expected moves until the end of the year. So let's have a look at Nasdaq and Q for the expected moves. And then let's see the future expected moves here in the option market. So the last expiry this year would be December 30th. Here you see it. This is the last one. Is it the correct one? December 30th. Yeah, should be this one. Yeah, okay, 9 days until December 30th. That's correct. That's the last trading day because the 31st is Saturday. This is the last trading day of the year. 9 days until then, and now we go to 11,200 points, 11,200, and there we see about 160, and on the call side also 160, so 2 times 160 points means 320 points. Therefore the expected move is 320 points for Nasdaq to the up or down side, and that's with a probability of 68%. So first standard deviation, 160 points to each side, means 320 points in total to the up or down side with a probability of 68%. This is what we see in the option market priced in right now. We can also go to SPX for S&P 500. So there we see the current price level is 3,845. And now let's go to December 30th expiry, and we go to 3,845 here. We see a 40 points and a 45 points. So this would mean 85 points. So you are almost correct with your 90 points. Here at the moment it's 85 points movement until the end of the year for S&P 500. Yeah, that's what we can see, that the expectation in the option market priced in right now, but it can change of course every day, like the prices are moving every day. That's what we see. And here is the rejection of the level we have drawn. It is a supporting level. We just tested and made some lower lows, maybe for some stop loss fishing. We talked about this in previous live streams, that we often see stop losses being fished right below the previous lows. Therefore, never set your stop loss right below the last low. Always leave a little bit of room just for not being fished here like this. And yeah, you can take on a long trade. We talked about this. So I'm already in a long trade. We haven't talked about this, but I'm already in a long trade since yesterday closing, because I told you that when we see a Fibonacci candle, I want to be in a long trade. And we have seen this Fibonacci candle, and it's a nice one. And therefore, I'm already with a small trade in a long future for Nasdaq here. And I'm waiting for higher levels to come. And as soon as we break above the Fibonacci level here, and as soon as we see higher highs and higher lows, so nice staircase pattern, then I will go in with more contracts, and yeah, go in with more as higher levels we see. My stop loss is right below the 11,000 level, so about 200 points away. But for the upside, I'm aiming to minimum 11,500, so 300 points to the upside. Better and more interesting level is the blue level here, 11,660, and my time target is still the second week of January, end of second week. So mid-January, I want to be out of my long trades at the latest. And if we reach some levels earlier, I will be out earlier. Maybe we will see a retest on the higher side, but yeah, that's almost, I think, 10% away. How far is it? Yeah, 9.5% away. So it's a little bit more difficult to reach, but nothing is impossible. You have seen that in 5 consecutive trading days, we made this to the downside, and we can also make it to the upside. We just have to be patient and wait for it. Yeah, thoughts on Tesla. Of course, let's talk about Tesla, because Tesla is down heavy, even when I wanted to say Jerome Powell, but it's Elon Musk. Even when Elon Musk said that he will step down as CEO of Twitter, it was only a short green candle, even not a green day, and we lost 8% yesterday again in Tesla. And today the announcement that there will be layoffs because maybe worse than expected economy, and therefore less demand for electric vehicles. And yeah, these are not good news again. So yeah, the market is green right now, but Tesla is around break even, and that's still weak. You see more implied volatility here on the blue line. Implied volatility is rising, therefore more fear for more drop on Tesla stock. My price target is still in place, $125. No position right now, and as I told you, I won't go in trade here before we reach 125. And then I want to see the same like with Nasdaq, a doji candle or something showing that we see the bottom, and then I can enter with a nice short put and pick up the high volatility and nice option premium. What else do we have? You asked me about the sugar trade. Yeah, I was stopped out, correct, because we had higher highs, you see, today. We are moving down again, so maybe we can hold the levels, but I'm out of the position, so I was stop lost out, lost about 2k in this trade here. But I'm waiting for high points to be set, and then I can re-enter this short trade. I'm just waiting because we have now a clear break of the previous highs here, and therefore I just wait for the market to settle and then see if I can re-enter a short trade. Nothing has changed on orange juice here, a light green candle today, but I want to see higher levels here for entering a short trade. But what else changed? Yeah, rice changed a lot. I have not traded it. Oh, sorry, where's the chart? Chart is missing. Rice changed a lot yesterday. So it's the problem because of the illiquidity of the market here. We talked about this. Only 200 to 250 contracts are traded. But yesterday, 1K contracts were traded, 1,000 contracts. And you see the big movement in only 2 days. Rice went up 6.8%. So this is a big movement. And we were talking about this already on the first day on the breakout here from the previous sideways trading. And now you see clearly it's like a U-turn. So we had here the sideways phase consolidation and here the breakout and confirmation phase. And yeah, this was interesting to trade, but I normally don't trade illiquid markets, but we talked about this. More interesting is natural gas, of course. Why? Because we talked about it yesterday. Let's go on a day chart here. I said I will pick up a long trade as soon as we hit the lows here. You see the 0% level of my Fibonacci retracement, and I picked up a long trade, but I didn't want to hold it too long, so I'm already out again of this position. But you clearly see that, yeah, again, we had some fake outs here to catch them stop losses, but the line hold, and we were trading in a sideways trading phase, and then we had the breakout to the upside, and there I went in and was already out again before we had the drop here. So right before, what was it, 1 p.m. my time, I was out again of the trade. Took about a 40, what was it, from 5.35 where I entered the trade here at the end of last day, to where I was stop lost out is 5.49. So this was about 14 cents, not a big trade, but yeah, this was just 2.6% in half of a trading day, and this made back my losses in sugar. Therefore, I'm pretty happy, and now I'm waiting for the market again to settle and to see direction again, because maybe we will have a breakthrough to the downside. We still have room to the upside. We talked about the $6 level here yesterday. But we tested these down levels here again too often, because if I zoom out a little bit, you see here was a test, here was a test, here was a test again, but we went a little bit lower than the last time. And now this is the fourth time we are testing these levels, and probably on the next time we will have the breakthrough to the downside, and there will be more sell-off, I think, and therefore you could take on a short call if you want to in the options, or just short the future of the breakthrough here. Implied volatility is still good. Just move here to implied volatility. It's dropping right now because we are at almost the low points of natural gas, as you can see, but it's still good. So we have still 85% expectancy of movement per year in natural gas, and that's still high. You will still get good option premium, but for now I have no position. Yeah, that's for natural gas. Let's go to crude oil. Crude oil is on the rise today, 2% in the green, retesting the previous highs. Now we reached the $78 level we were talking about the last times. I will redraw my Fibonacci lines here so that we can clearly see the levels. And here now you see the $78 level. We talked about this, so we almost hit the Fibonacci level. Let's see if we can now go higher, make higher highs than the last time, or we can make a double top here, and then we will see which direction crude oil will move, but it's still in a downtrend with lower highs and lower lows. Okay, what is your thoughts on NG? Yeah, we talked about natural gas. I'm just waiting because I think you see this is also a downtrend, so we have lower highs and lower lows, and I'm waiting for the breakthrough. So I rather want to trade it to the downside and to the upside. I just wanted to take these bounce here of the lows, and that's what I traded. But yeah, we had the too fast sell off then pre-market here, and therefore I went out. I was yeah, it was a stop loss taken out of my trade, but it was not for a loss, but it was for a win. It was a small win, but it made up my 2k losses in sugar, and that's fine. So now I'm waiting for re-entry to the downside for the breakthrough here. But it can take time. We can manage to go up to the $6 level again, but I want to have some cash in my account just to open more long Nasdaq as soon as we see higher levels here. And you see now it's rising. 11,240 points. Yeah, looking more bullish right now, retesting pre-market highs soon. So this is the next resistance level, 11,250, and pre-market highs were around this level at 11,255, 263 points. So just 20 points to go, but it's looking more bullish right now. Before the news, in 15 minutes we will have the news and can watch the movement together. What else do we have? Do we have something interesting? Yeah, Wix. Let's have a look at the Wix. You see how Wix dropped today, 5.5% today to the downside to only 20.3 points. So Wix is really low at the moment. So there's almost no fear of lower levels, and almost nobody is requesting or demand. There's almost no demand for new safety and for puts on SPX, and therefore VIX is dropping almost at the lows here. The last low point was on December 2nd at 18.95, so it's not far away, and you see the clear downtrend in VIX. So less fear. This should cause higher market prices, but for now we haven't seen them. And the same with Euro USD. We are rising for several days now, just sideways trading for 4 days now. But this normally means the weakening of the US dollar, that the money is flowing out of the US dollar and going back into riskier assets, and that should cause the markets to rise. We haven't seen this in the previous weeks. It was just sideways trading in Nasdaq, but maybe we will see it now, because it's December 21st, and last year the Christmas rally began on this date. Wow, here's the breakthrough already. That's strong for the bulls. This is pre-market high. Now we retested pre-market high. This should be a smaller resistance here. Let's see. Bulls want to go higher. Maybe a lot of shorties are stop lossed out and closing out their positions from previous days here, because we are going higher than pre-market and higher than yesterday right now. But normally this should be just a smaller resistance level here. Like here, we went a little bit lower than pre-market low just to catch some stop losses here, and then maybe the same on the upper side, that we catch some stop losses, and then we'll come back and retest the support level now. Fibonacci now is a support level because we are trading above. And you clearly see that we are trading above parabolic SAR. So as soon as we close this 5-minute candle here, it will move to the downside and will establish an uptrend. And the same here, crossing of ADX, you see a crossing of the purple and the magenta line. So this will establish an uptrend. It's not strong right now. We still need more strength, but it's showing in favor of the bulls. That's what we want to see. On a higher time frame, like 15 minutes, we see almost a crossing, just waiting for it. We have already established an uptrend on parabolic SAR. So you see here pre-market, yeah, we went down, but we didn't close below parabolic, and therefore we are still in this uptrend with higher highs right now. Let's see if we can hold the levels past the news, 10 minutes, and then we will have the news. What else do you have? Write it in the chat, and then we can look at the stock if you want to analyze a special stock. And like every day, no financial advice here, only for entertainment purposes. I never tell you to buy or sell anything. Just do your own due diligence. Let's have a look at Netflix, because I'm in a short put position. We talked about this 240 strike. I managed to go in with a second contract at almost the low point here. It was really crazy. I managed to go in at $6.30 for the 240 strike. I posted my entry in on Discord. And where is the price for Netflix? No, I haven't it here. Then let's have a look at here. So it's January expiry, 30 days until the expiry. That's what I would like most, around 45 days. And I normally take the monthly expiry. So you see here the normal expiries are the monthlies on the third Friday of a month. And the nearest to 45 days is now January 20th, 30 days until expiry. And the 240 put was at Delta 16 when I opened it. The first contract I sold for $5.30 and the second one yesterday for $6.30. So I got a nice entry point, a nice midpoint. That's what we talked about yesterday. You see here $6.30 for the second contract. You can still see the red line here. It was almost the high point of the day yesterday, right at the opening. And then, yeah, the market came back and the Netflix got stronger. And now we are trading at $4.35. So now you see this is a drop of 30%. So I'm already in the green 30% with the second opening of my short put here. Yeah, and even the first one that I sold at $5.30 is now in the green. So it's, well, a nice entry. Normally I don't get them so nice like this, but it's not over yet. So I want to have 80%. And as soon as it dropped to about $1.10, I will have the buyback and collect the remaining premium. And yeah, that's it. How options trading work. This time not my normal trading style, because normally I trade implied volatility. As you know, I'm an option seller and I sell the option when there's high implied volatility. But because we still have earnings in January, I think it is January 21st, so 1 day, no, 19th, sorry, 1 day before the expiry. On January 19th we have the earnings, and therefore we still have a high implied volatility here on this expiry. Compared to January 13th, you see here it's only 43% because the expiry is before the earnings. But on 19th, January 19th are the earnings, and therefore there's a higher implied volatility and higher premium in this expiry. But I want to be out before the earnings come out, so I will not hold the position through the earnings. I will not do this, and normally I'm out after 2 or 3 weeks, and this time it's not an implied volatility trade, my normal trading style. This time it's a more directional trade to the upside. We talked about this because I think that the last lows will hold, and we have here higher lows, higher highs, and therefore I'm expecting the stock to go back to 300, 310 level. Let's just draw a Fibonacci line to see the important levels, and this can cause the option to drop. You see here 310 is the Fibonacci level, and there I want to see the stock back at. This would be a rise of about 6.6% from current levels. Probably volatility will increase. Why? Normally it should decrease when the stocks are rising, but because there is the earnings still within the expiry, or just before the expiry, the implied volatility will rise until we see the earnings. And yeah, I won't expect that I will make money on volatility or volatility decay, but on the rise of the stock. That's what I want to trade. And yeah, let's see how fast the stock can rise. And every day is in my favor because salary decay is also working for me, because I sold options, and therefore it's in my favor when a day is passing by. Yeah, that's for my trades right now. Still waiting. Yeah, we had the rejection, you see, false breakout to the upside. So it's pulling back right now. The stop losses were triggered and some of the shorties were pushed out. And now we need a second attempt during market open to push through. And probably we will need the news to come out in 5 minutes, and then we can see a push through this level. Or maybe not. If the news are better than expected, then there can come up a little bit of fear. So let's look at this. So the The interest rate expectation, next Federal Reserve meeting is in 42 days, and you see the expectation has risen again. Yesterday we have seen, what was it, 64%, something like this. So the day closed at 70% probability for a 25 basis points rate hike. You see 4.5% is the current level, and 4.75% is the expectation for the next Federal Reserve meeting. So only 25 basis points, and almost 3/4 are expecting now that we see these 25 basis points. So less steep step than the last time with the 50 basis points. And yeah, this should bring out the fear, so less fear of interest rate hikes. And you see right now probability is 74%, and you see the rise in the previous weeks. 1 month ago it was at about 40%, 1 week ago at 61%, and it has risen to 74% right now. And if we see a weakening of housing market today, then this week, then we should see also that not Monday, Wednesday here at existing home sales, then this should also cause the market to rise, and we should see more expectancy for this 25 basis points move because of less fear of higher inflation. And on Friday we will have inflation data, PCE price index, again 3-star event 1 hour before the market open. So we will have a lot of data this week. Tomorrow GDP data 1 hour before the market open, and Friday core PCE price index 1 hour before the market open. So be prepared for these news tomorrow and the day after tomorrow. Yeah, it never gets boring at stock exchanges. 3 minutes left to the news. Even before Christmas, it's not cooling down, it's just still going on with all these news here. And now we have to wait for existing home sales to come out in 3 minutes. Market is pulling back a little bit stronger. So now you could also just draw Fibonacci levels here from this low to this high point. But of course, it's just on a smaller time frame, and it's just a small movement. This movement from the down to the up was 0.8%. So yeah, it's a fast movement within 15 minutes. So you could use it for drawing Fibonacci levels, but I won't do this on such a low time frame because I'm not a day trader. But if you day trade it on a 1 minute or 5 minute time frame, then you could use this also on lower time frames, because someone was asking this, I think it was last week in one of my previous live streams. You can use Fibonacci levels on every time frame. You can use it on low time frames like 1 minute and 5 minutes, and on higher time frames like day chart, week chart, or whatever. Of course, on higher time frames with bigger movements, the probabilities are better that the levels will work. Like you have seen here, this is on a high time frame, so the level is working. Yes, of course, sometimes we have these overshootings here, but the levels work, yeah, as you see. And yeah, they don't work as good on a low time frame because not a lot of traders are looking for these Fibonacci levels on lower time frames like 5 minute or 1 minute. But you can use them for your day trading if you want to. And I like Fibonacci. It's one of my most favorite instruments in trading, besides all the other things I use here. It's just a small set of instruments. Of course, you can use more than 50 or 100 indicators and oscillators, but where's the sense? Yeah, because then in any case, every indicator will show a different thing, and that's not what you need. You only need 2 or 3. That's it. And then you can take on a decision. So I use market techniques with higher highs, higher lows, or lower highs, lower lows. That's just market technique. And then I use some indicators in charting like parabolic SAR, ADX, VWAP, moving averages. So that's even enough. So just to see and just to help me to understand which direction the market wants to take on. So now we are at the moving averages at VWAP level. This should bring up a little bit support here, and the news are out. So let's see the news, and the housing market is a little bit lower than expected. Perfect. This is what we want to see. This can bring up more green. CB consumer confidence was higher than expected. That's a little bit worse, yeah. but not too bad for the economy, because we also don't want to see the recession. This is also a fear that will come out in the next week. I think in the next 3 or 4 weeks we will see more fear of a worse than expected recession, and therefore it can shift. For now we want to have lower than expected numbers, so a little bit worse than expected because of the inflation risk, the inflation fear. But in the next weeks and months we will see a shift to a recession risk, and therefore the fear of a too deep recession. And therefore we don't want to have too low numbers, a lot lower than expected. Therefore consumer confidence still at 108 points, a lot higher than expected, is not too bad. Yeah, we now have two different data here. We have lower than expected numbers on existing home sales, that's good, but we have higher than expected numbers on consumer confidence. So now you can see the indifference of the market. One is better than expected, the other worse. That's why I don't trade just the news, I trade direction, because I let the market decide which direction it wants to take, and that's it. Yeah, I just wait for the market to settle and to see which direction we want to take on. But as soon as we go here with higher highs, I can take on more to my long trade, because then I see this staircase pattern I want to see with higher lows and higher high points, and that's what I want to see, that the bulls are taking over now and can clearly manage to go with the breakout here. Yeah, it's working really nice. We have a good volume now, half an hour after the market opened, and then we can see the breakout probably to the upside. That's what I want to see. Yeah, if you have another stock, just let me know in the chat and then I can analyze it. What else do I have here? Nothing really interesting for you. Euro USD, we already talked about this, so it's still sideways trading. I'm still waiting for lower levels to come. I still have my short position here in place, but it's a hedge trade for my long Nasdaq trade. And yeah, it's interesting to see it in the sideways trading phase here, because this can be phase number 2 of a reversal. So we had the up phase, now phase 2 sideways trading, and as soon as we see the confirmation, the break below the last lows here, maybe we will have the phase number 3, and then we see confirmation for the reversal to the downside here in this case. Yeah, let's wait, but for now market is rising, and this should cause the Euro USD level to hold or to go even higher. But because it has risen already so high in previous weeks, maybe we'll just see holding of the levels or a breakdown again. What else do we have? What is Netflix doing right now? Let's go back to natural gas. So it was not too bad to get out of this trade. As you can see, of course we made higher highs right here, but yeah, that was just a steep crash, and you see here this line, I wanted to have higher lows and higher highs, and therefore I went out as soon as we broke here below VWAP and below the previous lows. So I went out of this trade, and it was just, yeah, a small profit, but sometimes it's better to have a small profit than a big loss, because you waited for too long. And I know that I'm trading, or was trading here, against the main trend. Back to Netflix again. Netflix here, you see now the same here, almost the same pattern like on Nasdaq, but a little bit better, because here you clearly see that it was a green candle, not a doji candle, but something like a hammer. So we have a huge wick on the downside here, retesting previous lows, and a green body. So this is a hammer, and this can cause further buyers to step in now. And again, you see we tested lows, but we went back higher. So this is a nice pattern to see. We'll just take out the pre-market data, and then you see it was yesterday a clear green candle, and today again. So this is a nice candle I want to see, and which can bring down the option premium of my short put trade. So my Netflix trade is now in the green more than 30% right now, because the option is trading at, what is it, $4.35 right now. Yeah, it's only a small trade, I know, but yeah, sometimes you just need more of these small trades to have a low risk, So you can have more of these small winners, but if something goes wrong, you won't have a big loss, and that's what I want to have. A lot of small winners and not aiming at the jackpot trade. Meta for the long term, yeah, I took up some Meta stocks previous month. So I have already a lot of Meta in my long-term portfolio, maybe not at the cheapest price level. Someone was writing to me yesterday, BYND is looking interesting because it's in a sideways trading right now between the, what was it, $12 level here and the $17, $18 level. Yes, but implied volatility is not really interesting, and this stock is really low at $13.50 right now, so you won't get a lot of premium. It's not really my trading style to trade these sideways stock markets here, and therefore I won't take up a trade here, but maybe it's interesting for some of you. Let's go on to Meta, also one of the big five, or it was one of the big five, but they are not as big. How big is Meta now? Let's see. Meta Nasdaq here. I will bring it up for you. Slick charts. So we also see that it's in an uptrend with higher lows and higher highs, but it's in a sideways trading phase since about 3 or 4 weeks on a week chart, and we also see the same pattern on a day chart. Higher highs, higher lows, but on the sideways trading phase here. So we have to wait for the breakout above the $125 level or the break below $112.50 at the day closing. We had a big green candle yesterday and going back from the lows, from the retest of the lows, so that's a good sign. But yeah, we have to have the breakout for a trade. If you want to take it long term, yes, it's nice, it's interesting. As I told you, I have it also in my long-term portfolio because I think it's just a cheap level. You see, it's cheaper than even 2019, cheaper than during COVID lows here in 2020. It was a really interesting level. I took it at $100, but it went to lows of $88, so 12% lower. And yeah, it's now in the green, about 18%, but I already went in at about $150, $55. And yeah, so yeah, I have a bigger position in my long-term portfolio, and I'm now just waiting for it to see a reversal and the breakout to the upside. But I think in 10 or 15 years, the stock should be higher because I like Meta, even if some people don't like Mark Zuckerberg. I like what he's doing and his mindset and the metaverse. Yeah, I know it's stupid what's metaverse is now, and that he is investing 10 billions or more in the metaverse. But look back 20, 25 years. What was the internet? 20, 25 years, it was almost nothing. Yeah, you needed to log in on the internet with a modem making weird noises. I can remember when I was a child, it was just crazy. It was slow and you paid by minute. It was just stupid, and you weren't able to buy on Amazon or on shops. Yeah, there of course there was eBay and so on, but there was no fun in surfing on the internet. But it's completely different today. I think the metaverse is at the same point the internet was 25 years before, 25 years before, because there was almost no interesting point of doing business on internet. But today there is. No one can go out of his home without a smartphone because we want to have internet always at our side. And I think metaverse will be the same in 20 years. So everyone will use augmented reality or even be fully in a digital world and be in the metaverse. So the world will change. We cannot imagine today what this world will look like, but I think Zuckerberg is on the right way, and therefore I bought in Meta big, and I like this stock still. Yeah, I still like it. It's a little bit like Google because they are selling advertisements on Facebook, but they also have Instagram and WhatsApp, and I think that these services won't move away. So Meta is too strong, and they won't let the others overtake. Even TikTok and YouTube, I don't think that these things will overtake the metaverse with all the apps they have right now. And therefore, I'm just waiting for it. Yeah, it's an investment for 10 plus years and nothing for tomorrow. Okay, what else? Nasdaq new high. Yeah, that's what I wanted to see. And yeah, perfect. That's what I wanted to see. So I can take on a new long trades here on this retest. Maybe we will come a little bit lower, just a retest of the previous highs, and then I can take on some new longs in my trade, in my long string trade on Nasdaq. And if we don't retest, then I can also take on a break of 11,300. Yeah, I don't care about 10, 20 or 30 points on a swing trade, but it's an interesting level. You see a clear pattern now, staircase pattern. That's what I wanted to see, and it's working now as expected today. I was a little bit earlier in the trade last week. I got stopped out, but now I see the pattern I wanted to see, and I think that we will see now the Christmas rally. Don't know how strong the rally will be, if we will see 500 or 1,000 points in the next 2 weeks. Maybe it's this rally which will go on after Christmas until New Year and the first weeks of the new year. I hope so, and then I can stick to my long position. But I'm prepared for it, so I know where my stop loss level is, and I know where I will take on more on my long position. And you should do the same. Just prepare for your levels to come, and then don't be in fear when the levels come, because you then should know how to act. And that's the most important thing. Prepare for everything. Then you are not in fear. You can be calm, you can be patient, and then you can just do your plan. And yeah, that's it. Trading is sometimes easy. Yeah, it's not easy to do, but the preparation is normally easy because you clearly see the levels, like we do it here together, so you know where to enter, where to exit. But the doing of itself is sometimes difficult because you have your own feelings. I know it's, especially as a beginner, it's sometimes difficult to have these feelings. You don't want to have the pullbacks, but you need the pullbacks because we want to have the staircase pattern. We want to have higher lows and higher highs. Therefore, I know after a new high, we need a pullback. And that's the pullback where I want to enter my position. That's what I will do right now. Therefore, I will close out this live stream. Thank you for watching. We will see us tomorrow. I will try to live stream the news pre-market. And yeah, therefore, please subscribe to my channel. And if you haven't done it right now, then ring the bell to be informed every time I go live. Have a nice trading day. See you tomorrow. Goodbye.